Hey, hello. My name is Matt Smith. I work with Secure Insurance Group. I wanted to talk to you today about a hospital indemnity plan and what a hospital indemnity plan is, how you sell it, who your target market is, just a lot of different things about hospital indemnity. I think it's a great product. It's a tremendous product for anybody that's in the health space, especially Medicare, but it also has a really good play in the under 65 health market. You can make a ton of money doing that, selling it there. And so that's what I want to talk to you about today. So we'll get in here. What is a hospital indemnity plan? Hospital indemnity plan is hospital indemnity insurance is a supplemental insurance plan designed to pay for the cost of a hospital admission that may not be covered by other insurance. So basically, what that means is it's a reimbursement plan. And so if you sell a hospital indemnity plan to a client, that's what they can expect. It's going to reimburse them for some covered expenses. And so one thing that I always ask, or one thing that I always tell clients is I always say, do you know what a hospital indemnity plan is? And 95% of the time, they're going to say, I have no idea, never heard of it, whatever. And so I typically will say, well, did you ever have AFLAC when you were working? Or do you know what AFLAC insurance is? And that typically is kind of a good segue, and they typically know what that means. If not, I tell them, okay, that's fine. So basically, a hospital plan is going to reimburse you. It's going to reimburse you for anything that's covered by the plan. And so typically, we write Heartland National, which we write a ton of Heartland National. There's a lot of companies that sell hospital indemnity plans, tons of them, and I've looked through a lot of them, and I can tell you this, Heartland National's got the best hospital indemnity plan on the market. They do a lot of really good things that other companies just aren't doing. And we'll kind of talk about some of those here in a minute, but their base plan, it includes three main things, and so this is what I always sell whenever I'm selling one, is the base plan that covers overnight hospital stays, observation stays, emergency room, and then I always add the ambulance rider when I'm selling this policy. It is a rider, so it's optional, but it's like $2 a month. Sometimes it's less than $2 a month. Like $1.80, sometimes it's up to as high as $3.20. So it's very reasonable. And kind of in my thoughts, if you're paying $27 a month for a reimbursement plan, what's an extra $1.80 or what's an extra $2? So I always throw it on there. So the four things that I always cover anytime I sell it is overnight hospital stays, observation, emergency room, and ambulance ride. So the way that works is the reason why I love Heartland National, there's a lot, but one of the things that I really like about them is they're not a one-size-fits-all plan. And so what I mean by that is it's very flexible. And so especially if you're talking to somebody that's a Medicare client on a Medicare Advantage plan, for instance, and they have a $295 per night copay to stay at the hospital. Well, Heartland National will let you pick what their inpatient hospital, overnight hospital stays, what their inpatient hospital reimbursement amount is. It's anywhere between $100 and $600, any increment of $50. And so I really like that it's flexible. So because Medicare Advantage plans are so different, right? You may have somebody that's on a $295 a night plan, but then there may be a $350 per night plan. So just kind of what it allows you to do is really tailor that that hospital indemnity plan to that exact Medicare Advantage plan. So it's not a one-size-fits-all. You're not trying to. I always tell clients you're not trying to fit a square peg into a round hole. It's pretty flexible. So I like that. So the way it works is they will get all the benefits they pay for. So you'll sell them a specific dollar amount, and you can choose how many nights that they'd like that coverage for. 3 nights is their minimum. They actually go up to a maximum of 31 nights. So 3 nights is their minimum, max of 31. I always tell clients when I'm selling it to them on a Medicare Advantage plan, and we'll get to how I sell it here in a little bit, I always tell them 3, 4, or 5 nights is typically going to be your best coverage because in my market, I guess that is, most of the Medicare Advantage plans have a 5-night inpatient hospital copay, meaning those clients are having to pay for 5 nights. So I always tell clients, and I think it makes you look good as well, that you're not trying to upsell them. I always tell them, hey, 31 nights kind of overkill, right? I think you need 5 nights because if you have 5 nights worth of coverage on the hospital plan, you have a 5-night hospital stay. Your Advantage plan is going to charge you, at $295 a night, just call it $300, $1,500 bucks. Well, that hospital indemnity plan is going to give you $1,500. And then I'll typically tell them, if they act like 5's too expensive, I'll tell them, you know what? 4 is better than nothing, so we'll look at what 4 costs. And if that's still a little high, we'll look at what 3 costs. But and so that's kind of just some common little things that I do. It's totally guaranteed issue, 64.5 to 65.5. So they recognize people are going on Medicare, and that's a big life event. And so it's totally guaranteed issue, 64.5 to 65.5. Other than that, it's 18 to 85. So if they're not in that window, there are health questions. But I'll tell you this, the health questions are fairly lenient. They're fairly lenient in what they're looking for, so you won't get a lot knocked out. It's totally simplified issue. And so simplified issue meaning they're going to take you at your word. So if you write a policy, they're not going to underwrite it at that time. They're just going to go ahead and issue the policy. They're going to issue the client the policy. They're going to pay you commissions and everything like that. Now, if for instance, there's a claim to be made, what happens is that process kind of looks like this. If they make a claim within the first 12 months of owning the policy, so say it started in January 1st, if they make a claim anytime January through December of that first year, it will be underwritten at that time. That's in that 1 year contestability period. And so they have 1 year to contest it. So they'll go back through, make sure you were honest on the application, make sure there weren't any pre-existing health issues that they didn't know about, and then they'll, as long as everything checks out, they'll cut a check. And so I always tell people usually that first one can take a couple weeks because they're underwriting it at that time. And so it's kind of, there's a lot of things going on, a lot of moving parts. You've got to get them the correct bills. They're going to want what's called a UB04 form. And you've got to get that UB04 form into them. Basically, it's an itemized bill showing everything that happened to them, everything that they had done. And so you've got to get that form to them. Pretty easy. You get that form to them, and then they start the underwriting process. Now, if it's outside of that first year, say they bought it in January of 2021, and in January of 2022, they're in their 13th month, they have a claim. It's outside of that contestability period, so Heartland National will just go ahead and pay it. So that payment's pretty quick if it's outside of a year. Also, if they're making more than one claim, so say for example, say the effective date was January 1st, 2021, and they made a claim March of 2021, right? If they made, and everything was good, they got the claim paid. If they made another claim in July, for instance, that claim would be very quick because they've already done the underwriting on the case. So that's just kind of some underwriting tips and how that kind of works. But it's very, very simple. They've got an excellent e-application. They've got a paper application. They pay a really good commission. I think their commission is about 67.5%. So it's a very, very good commission. Some optional coverages, and I don't add a lot of these typically when I'm selling it to my Medicare clients. I do when I'm selling it more to the under 65 market, and we'll talk about that. But the outpatient surgery rider, which they can choose, they can elect to add anywhere between $100 and $1,000 in benefit, which is just a lump sum outpatient surgery. If they go have cataract surgery, they'll get $400 if that's what their benefit was, or whatever the number is. Inpatient hospital rider, that's a lump sum inpatient hospital rider. So if you can add anywhere, I believe it's $500 to $2,500, and they can elect that, and it's a lump sum. So they stay one night in the hospital, they're going to get whatever their daily overnight hospital stay benefit was on the base plan. Say that was $300, and then say, for instance, they elected $1,000 on the rider, they're going to get $1,300 for that. $300 for the daily, and then $1,000 for the rider. So that's how that works. There also is a cancer rider you can add, which is a really good rider. Basically, the way it works, they will have to answer a couple additional questions about cancer, and then if they can do that, they'll be passed, and they'll go through and they'll have the cancer plan. Now, it's actually really cool. It's got a reoccurrence benefit, so basically, it's not a one and done, not a use it and lose it. If they use it over the next couple of years, it can actually build back up to 100%, and they can use it again. And so it does have a reoccurrence benefit in there. So basically, we've looked high and low, we've looked all over, and I can tell you with certainty that Heartland National is, if you're writing any hospital indemnity, it's the place to be writing it. And if you're not, you definitely need to start writing some hospital indemnity. So we'll move on. Your target market, I believe there's really two target markets that kind of catch everybody. So I think everybody's a potential client for this. I think Medicare clients is the obvious one. I think that's the one that people see, and that's pretty easy, right? Anybody that's turning 65, anybody 65 plus, so any Medicare client. But the two that I think are really obvious, really easy, and we'll talk about those here in just on the next slide, is any of your turning 65 clients or anybody 65 plus, especially those with a premium plan. So if they're on a Medicare Advantage plan that charges them a premium, absolutely get them to a zero plan if they've got one in your market and put them on a hospital indemnity plan. They will thank you, and it's almost a no-brainer pretty much. And we'll talk about what I mean here in just a minute. So I think Medicare clients is the obvious easy one, but the under 65 clients, there's a huge potential here, a huge potential. And we'll talk about how you sell it here in just a minute to both those clients, the Medicare and the under 65. But individuals with a high deductible or high max out of pocket absolutely should own one of these. And so those individuals are people that have a $6,000, $7,000 deductible, that they're kind of your middle income earners. They're not your low income people. They're not your high income people. They're your middle income earners, but they should absolutely have a hospital indemnity plan with the lump sum inpatient rider on it. And so if you put that at like $2,500, they just met half their deductible just on that. And so it's a tremendous opportunity, not to mention the Medicare clients. When you're selling one to a Medicare client, your average premium is going to be about $30 a month. Sometimes it'll be a little higher, sometimes a little lower, but about $30 a month. On your under 65 clients, I'm telling you, the opportunity is endless. I mean, you're looking at like $150 a month would be about an average for an under 65. And at 67.5%, not too shabby. So I think there's tremendous potential in both, but your serious money is going to be in your under 65, but it's a pretty easy sale to your Medicare clients as well, an add-on. So let's look at how to sell hospital indemnity plans. Hospital indemnity plans, we'll start with the Medicare clients. Anybody that's turning 65, it's almost a no-brainer for them. And I sell typically about 40% of the time. I'll be able to get the hospital indemnity sale along with the Medicare Advantage sale. But anybody T65 you've got a pretty good chance at getting them. It's totally guaranteed issue. So if you're sitting across from somebody that wants an Advantage plan, but they've got some stuff going on, it's totally guaranteed issue. So they absolutely need to have it because they're going to have some hospital bills coming up, And if you've got somebody healthy, it's dirt cheap. It's like $23, $24 a month for a turning 65 individual. So I think that's pretty easy to make that case for, especially a lot of people in Medicare, for example, are on a fixed income. They may make $1,200 a month or $1,300 a month or whatever, and that's fine. But can they handle a $900 hospital bill if they get it? Well, the answer is no. That would be they couldn't do that. Well, could you handle a $24 a month premium? Yeah, they probably could. And so T65 is really good because it's a good price, it's guaranteed issue, and they can hold on to it for a long time. And so anybody T65 is a pretty easy sale. Anybody coming off of group coverage. So this can be group, this can be COBRA, work coverage, whatever. If they are coming off that, I'm telling you, this is probably the next two, coming off group and MAPD clients with a premium, are your easiest sales. You will never have an easier cross-sell in all your life. I bet that number on the closing there has got to be 90%, and if not higher. Coming off group, you got to think about it. These people are paying $400 or $500 a month, or COBRA, or whatever they're coming off of. They're paying $400 a month. If I put them on a Medicare Advantage plan, it's got a zero premium on the Medicare Advantage plan. This year, the Part B premium is $148, so $148 there. They're paying $500 right now, so they're saving them money, and so that's great. But if you bundle the hospital indemnity plan on with it, even at $30 a month, you're looking at $178. They're still saving money, and they've got tremendous coverage. And so I think anybody coming off group is a phenomenal candidate. And like I said, you're really not going to miss many times. You're not going to swing and miss many times on anybody coming off group coverage. It's almost a slam dunk right there. The second person that I think is just stupid easy to get a Medicare Advantage sale to is going to be anybody that has a Medicare Advantage plan, but they pay a premium. So let me tell you what I mean. So we've got, in my market, we've got two plans in specifically, one through Aetna, it's $25 a month, one through United Healthcare at $24 a month. And so I'm telling you, the way that you can sell this almost every time, get in front of one of those clients that's paying a premium and you say, hey, Mrs. Jones, you're paying $25 a month for this Aetna plan. What I wanted to talk to you about today, have you ever heard of a hospital indemnity plan? And she's going to say no. And you say, well, let me tell you what it is. It's a plan that reimburses you for any outpatient hospital or any inpatient hospital stays, any observation benefits that you may have, any ambulance trips, as well as the emergency room. It's going to reimburse you for all those things. So, Mrs. Jones, let me ask you this. Does it make more sense? To me, it makes sense. Does it make sense to throw $25 a month to Aetna every month and then have a 3-night hospital stay, and then you're going to get a bill for $900, right? Or does it make sense to move from that $25 plan to the $0 plan, and we take that $25 that you're already spending, move that towards a hospital indemnity plan? The indemnity plan will probably cost you $28 a month, okay? That means, Mrs. Jones, you're at an additional $3. But now you're at $3 more than you were already going to be. But whenever you get that $900 hospital bill that we were just talking about, you're going to bring it to me. We're going to send it up to Heartland National, and it's going to be totally paid for. They're going to cut you a $900 check. And so it's a fantastic way. Anybody that's paying a premium with a Medicare Advantage plan, I'm telling you, almost every one of them are going to move to the $0 plan as long as they can health qualify, which I said earlier. Heartland's very, very lenient on health qualifications. They're going to move to the $0 plan with the Advantage or with the hospital indemnity plan. So I think that's a tremendous market. It's just going to add a few $100s to every sale. Like if you're looking at making $270 on a rewrite Advantage plan, and then you add another $250 for this, you're up to making $500 off one client. And so it's a tremendous way to add additional sales, and I think it's probably the easiest cross sell I've ever came across. So it's very, very easy, and it can definitely add thousands of dollars to your pocket every single month, every single year. I mean, just think you sell 10 of those, you're at $2,500 pretty easily. So great product. Now, let's talk about the under 65 market for just a minute. The under 65 market, I'm telling you, you can make more money in that market than just about anything. And I've sold several of them to where, and I'll walk you through how it works. Basically, if I've got a client and I'm looking for your middle income people, I'm not looking for your low income people, I'm not looking for your high income people. I'll give you a real example. This lady came into the office about a month ago. She was paying, I don't remember the exact number, about $420 a month, something like that. And that was on her plan that she was on. Well, we put her on Medicare.gov. We said, well, or Healthcare.gov. We looked her up and said, let's see if we can get you any subsidy. And I'm looking for those individuals that get some subsidy or get a lot of subsidy. And so this lady got $300 or $400 a month in subsidy. And so her plan premium was like $25 for her Healthcare.gov Obamacare ACA plan. And so basically what we did was I could find her a plan that was really, really good that matched her other plan, but that premium was like $400 or $500 a month. It was the same thing. She was going to be spending a lot of money. So we looked, we could put her on a plan through, in this instance, it was Medica, but it's got a $6,000 deductible as well as a max out of pocket. And so it's very high max out of pocket, high deductible. But here's how that works. She's only paying $25 a month. I just took this lady from $400 to $25. She's all about it. Now, the only way that would be a good decision is if she has the hospital indemnity plan. Now, she adds a hospital indemnity plan to it, and on that, we're going to sell her the 3 base plan things plus the ambulance rider. So we're going to sell her those 4 things: the inpatient hospital, the observation benefits, the emergency room, and the ambulance rider. We're going to sell her those 4 things, but we're also going to add on a bunch of other stuff. So, for example, I'm not going to sell her 5 nights in the hospital because she could have something crazy happen. We're going to bump that up to 31 nights, and it's so cheap for somebody she was in her 30s. For somebody in her 30s, it was so cheap. Let's put 31 nights on there. We also increased it from, instead of $300 a night per night, we increased it to $600 a night because she's got a deductible to pay. And so several things like that. We also added the lump sum inpatient hospital benefit and the hospital rider. So if she stays 1 night, it gives her whatever she bought. In this instance, we sold her a $2,500 benefit there. So Oops, excuse me, sorry. All right, so she in this instance, she would have received, if she stayed one night in the hospital, she's got a $6,000 deductible, she would receive $2,500 for just the rider portion that she paid for. She would also receive $600 for the daily inpatient benefit. She was going to get $3,100 just like that. That's half of her deductible right there. Now the premium on it was like $150 a month. I think it was a little bit less, but we'll use 150 for round numbers. 150 a month times 12 is $1,800. Multiply that by 67.5%. I made $1,215 on that sale just from doing that. And she's got tremendous coverage now. And she walks away saving herself $200 a month. So she's got good coverage. She's also saving $200 a month, and I made some good money on it. And so I think there's two tremendous markets. I think the Medicare market is easy. It's obvious. If you're sitting in front of a Medicare Advantage client, you have to bring it up. You're just losing money by not. And then your under 65 clients as well. I think there's just so much money there. I think you could make a living just simply selling these plans. I mean, it's that good. So that's how you sell hospital indemnity plans. That's how I pitch it. But let's move on. So I want to show you a sample quote just to show you how cheap it is, how easy it is. So we're going to go online here. So we will run a sample quote. They've got an e-app you can use. They've also got a paper app. Their e-app is super simple, so we really like the e-app. So we'll run a quote here. We'll run it on a Medicare individual. We'll say 6/5/1954. And we'll do $300 a night. Say they have a $295 per night copay. Here's all the nights that they're eligible to select. So 3 nights all the way up to 31 nights. Like I said, we're looking more in that 5-night range. We will select Missouri. They have a household discount, and it's a 7% household discount. So we'll add that. So this base plan right here, you can see the premium is $27. This client would get a 7% household discount. That's $1.89. So their premium would be $25.11. Now we want to add that ambulance rider on there. So we'll go down here and add the optional rider. It's $2.40 to add that ambulance rider. So $29 is their premium. They get a $2.06 household discount. Their premium is now $27.34. So that's a tremendous premium. If we wanted to apply, we could click this blue Apply Now button and go through the entire application process. Very simple online application. I do almost all of them online with just a few exceptions, but the online is just super easy to use. And we can run another quote here on somebody. We'll start over. Now we'll show you a quote on somebody that's under 65, for example. So we'll do 6/5 of 70. Any amount between $100 and $600 is good. Again, on the under 65, I'm exclusively, almost not always, but a good portion of the time, we're going to do $600. We're going to look at probably 31 nights. One thing that you can know, and you can get on here and play around if you're interested, the difference in like 10 and 15 nights and 31 nights is pretty minimal. Like it's just a few dollars. So there's really no reason to sell 10 to 15 nights. I would always sell the 31 if I was going above it. So we'll do Missouri. We'll add the household discount. Now, this individual is 50 years old, right? They've got a $600 daily benefit for 31 nights. For that, they're going to pay $39.60 for it. Now, they also get that $2.77 household discount, so it knocks it down to $36, right? But we want to cover them properly because they're still really not covered properly in the under 65 scenario. So we're going to add the ambulance rider on there. It's $1.60. We're also going to add on the lump sum hospital confinement, and we're just going to play around with the numbers. So in this instance, for this guy, I would absolutely sell him $2,500. It's going to add an additional $43. Our grand total for the premium is about $78, or is $78 right now. You can add other things if they're worried about it. For instance, like $1,000 towards lump sum outpatient surgery, or $500, or whatever you wanted to add. So for this example, the client's got $600 in daily benefit for 31 nights. He's got $2,500 of lump sum outpatient hospital, or inpatient hospital, excuse me. He stays 1 night in the hospital. This guy's going to make $3,100. And then he's also got $1,000 outpatient surgery. So if he had an outpatient procedure, he's going to make $1,000. as well as $200 for the ambulance. So this guy has tremendous, tremendous coverage, and I think you can see the value in that. If he was paying $400 or $500 a month, if I can get him on a $20, $30, $50 a month, $100 a month, whatever subsidy plan, through the marketplace, and then add this for $116 a month, that's kind of a no-brainer. And on the $116.90 a month, you'd be looking at times 12, $1,402.80 for the year, at 67.5%, $946.89. So you're making some serious money, and I think you're really, really helping people, because this guy would save some money. So anyways, that's how to run a quote. It's very, very simple. We can get you contracted. It's a great, great product. So this is Heartland National. Again, we've looked high and low. We've looked at a lot of different companies and a lot of different things, and truthfully, nobody touches Heartland National. So I hope that answered all your questions today. If you have any additional questions, feel free to email me. My email's on the screen, matt.smith@secureig.com. You're also welcome to call. My phone number is the office number. It's 417-883-9300. Again, 417-883-9300. Call or email is great. I can answer any questions you have. If you would like a hospital indemnity contract through Heartland National, we would be happy to help you out with that, give you some additional training and additional insight on how to sell it. But it's a great product, and I think you guys will tear it up and do really well. So I hope you have a great day. If I can do anything for you, or if you have any questions, feel free to give me a call or shoot me an email. Thanks. Have a great day.